Why are investor rates going up? Just like Netflix subscriptions are also going up, interest rates on investors are also going up. Netflix has raised its subscription prices for the first time since its launch in Australia in 2015, thanks to the government's so-called Netflix tax, which adds the GST to digital purchases made overseas from places like Netflix and Amazon. Now, banks are also raising rates, but not for the first time this year. It's actually the fourth time this year, and they've raised rates ahead of the RBA, and there'll be more rate rises coming soon, thanks to the government's so-called Bank Levy Tax, to be passed on the 5 major banks: Westpac, CBA, ANZ, NAB and Macquarie Bank. But besides the bank levy and the government's excuse of raising rates to curb investor lending and the bank's tight regulation for APRA, what are the main reasons why banks are raising rates? Well, Trump. While the official cash rate is still sitting at a historically low level of 1.5%, a lot of banks are now repricing the loan products because their costs of funding are higher since the new presidential election. But what does this got to do with the US? Well, quite frankly, a major portion of Australian banks' funds come from the US. According to the 2016 budget, we are $37 billion in deficit, and the Treasurer, Scott Morrison, will be lifting the credit limit once again as Australia's debt hurdles towards $600 billion, which Joe Hockey had left it at $500 billion last year. Go the Liberals. So basically, we have nothing to lend out even if we wanted to. Everything is coming from overseas. So you see, the government is so hell-bent on foreign investors while they are actually using foreign funds to lend out to the local economy. So interest rates are going up because the bank's cost of buying foreign funds have increased. Just before the presidential election, bond yields in the US were below 2%. This is 10-year bond. Now after Trump, they are about 2.5%. So that's about 80 basis points higher than they were 4 or 5 months ago. But is this really true? Is the banks raising rates due to overseas cost of funding? Is Trump to blame for all this? But a lot of banking analysts are not buying the bank's excuse that rates are going up due to the bank's increase in wholesale lending costs. Instead, it's just a big fat excuse to just boost profits. I mean, everyone's pointing at Trump for everything negative these days. So pointing the finger at Trump for the consecutive rate rises also makes perfect sense as well. So we got banks saying that we need to work with regulators to cool the heated investment market. We got banks saying their cost of funding has increased. We got banks saying we need to discourage interest-only lending and encourage principal and interest repayments so investors and owner-occupiers are not stretching their affordability limit. But is all this just smoke and mirrors from the reality that we are just giving the banks what they want the most? Huge profits and little media backlash. And shouldn't the banks have a responsibility to give this money back as a form of grant for first home buyers? Or more investor education on how to handle interest-only loans, rather than just profiteering from the whole scheme of things and just sitting back and collecting money? What are your comments on this? Leave it at the comments section below. Until next time, keep calm and mortgage on. Available on Amazon and Kindle.